Hello, all you lovely people out there. How are you all doing? I'm Kate Hill, and I am here to give you the best commentary about our property markets. Tina Howes is with me from SmartMove, one of Australia's leading and award-winning mortgage brokers. We are giving you a whole series explaining all things property finance, so stay tuned. Hello everyone, I'm back with Tina Howes from SmartMove, one of Australia's leading and most award-winning mortgage broking firms. And Tina and I are here to talk to you about all things property finance. So Tina, tell us all about what you have in store for us today.
Okay, thank you. Today's topic is things you didn't realise could hurt your finance application. Yeah. Now it's really important to me because it's something that as a finance professional, I'm well aware of these, but to the average person out there, they're simply not.
Don't know.
And by the time it comes to applying for your finance, it could just be too late. So I actually had an example recently with a client of mine that they ticked every single box that you would possibly think of would put them in a good stead to get a loan. They had great size deposit.
Yeah.
They were buying in a good location, fantastic business with very strong profits. But they had done something over the years that had hurt their credit rating. They didn't have defaults. They didn't have a poor score in that regard. But what they had done was they had managed to get themselves a lower than average credit score from several things along the way that I wanted to kind of share with you to bring to your attention.
Right.
So applying for multiple credit cards. Okay. Now, every time you apply for a card, it hits your credit rating. And behind the scenes, when you apply for a loan, a credit check is done, and there is a thing called credit scoring that essentially looks at number of credit inquiries as a factor that can make you appear to be a higher risk to a bank.
Right.
Yeah. So I've seen clients that are chasing points. So they will open up a card with an interest-only period or a balance transfer, move to a new card in 12 months' time, take the balance across, or, there's a special whereby they get 100,000 frequent flyer points if they open up a new card. And so the story continues, but these sorts of behaviours actually can hurt you when it comes to getting a loan. Okay.
Right. Yeah.
Taking out store credit cards. So when you're going to Harvey Norman and want to buy some furniture, instead of just using your credit card and then paying it off in full at the end of the month, taking out the loans that they offer you, getting that line of credit that enables you an interest-free period. Again, that's another credit inquiry. Multiple small finance provider type loans impacts on the way that the banks will see you, because ultimately, if you have strong savings and strong cash, you're going to pay cash for things, or use your one credit card and pay that off in full at the end of the month. Okay?
And can I ask quickly, is that then a case of you having to explain yourself? Will they, do you have an opportunity to say, well, look, this is what I did, it's, we're okay? Or is it literally a computer that then goes, no, too many credit inquiries, no?
It's 50-50. Some banks take credit scoring very seriously to the point where if the score is not meeting their requirements, it could auto decline. In which case, if it auto declines, you have zero opportunity to talk to a human and override it.
Wow.
Okay.
Yeah.
So it just means that if you're going directly to that bank, you don't know what their process is, and that could mean a decline for you and missing out on the property that you wanted. Or if you're going to a broker, it could mean that, perhaps the one bank that was going to suit your needs is no longer available for you, and you might end up paying a higher interest rate or not being able to borrow as much money. So generally there is going to be a solution, but it's something that might not give you the most optimal lender choice.
I've still got the term auto decline ringing in my ears. I'm like,
Yeah.
wow.
Yes.
Yeah.
Yeah,
Wow.
it's a thing. The other thing is also every time you go and take out a new loan with a new provider, chances are there'll be a new internet banking platform, another password to remember, another direct debit to set up. And sometimes those companies get it wrong. They might be offshore. There's lots of paperwork. They're not going to be, you won't necessarily be able to walk into the branch and say, hang on a second, why haven't you set this up? So this particular client, they didn't have a direct debit set up through no fault of the clients, but that's appeared on their credit rating as a missed payment.
Yeah.
So now they're busy chasing up with that provider to remove that. They've promised to remove it off Equifax so that it doesn't impact upon them. However, it's too late. It's already on there, and that doesn't help the cause, which is buying this property that's on the market right now.
Yeah.
So,
What's Equifax, Tina? Explain.
Equifax is a provider out there whereby the banks subscribe to that company and perform your credit check. So
Gotcha.
every single time you obtain finance for any sort of loan, there's generally two providers out there. Equifax used to be Veda, and there is another provider that I can't tell you the name of, but a lot of the smaller finance companies will use.
Yeah.
So it's essentially an inquiry for finance will hit that report. And so when you go and get finance, it's quite obvious what actual loans you have open. You can't not disclose those because there is this reporting of those accounts and whether you have missed a repayment or not.
Yeah. Wow.
Yeah.
Yeah. Big brother knows. Yeah.
Yes. An additional point that you need to be mindful of is identity theft and fraud.
Yeah.
Now, this is something that one of the things, if you come to SmartMove and want to get a home loan or understand your borrowing capacity, one of the first things that will be done is a credit check. And that's a credit check that doesn't hit as a inquiry of finance. So it's not a detriment against your rating, but it is just to check and make sure that nobody out there has stolen your identity or fraudulently opened up a credit card in your name and then not made a repayment, or you've moved and your Telstra bill has been sent to a previous address and you haven't been able to track that down, and Telstra have listed a default on your credit check.
Yeah.
So those are the sorts of things that it's important to make sure you do obtain a credit check. You can do that via going to Equifax yourself. Without having to wait to go to a finance provider. So you're armed and you know exactly what your credit score is. Had another client that, without realising, they had a couple of cents outstanding at a Macquarie Bank credit card that they just didn't know had happened, but it had appeared on their credit file as 4 missed repayments, which will present as an issue for the lender. So now they're on the phone busily trying to sort it out with Macquarie, but it might take some months for Macquarie to get it removed. So just something to be really mindful of.
Yes. Wow.
My other point is, if you're a director of a company, when you apply for finance, that directorship will appear on your credit file and the lender will want to know about that directorship. Their default position will be, we want to see the financials and tax returns of that company. So if that's a company that perhaps has got losses or is not trading, or there is something there that potentially impacts upon your application, it's really important to disclose that to your bank or your broker upfront. So the lender that you go to, you can make sure that you can provide whatever it is that specific lender requires for that particular directorship.
Yes. And that's fair enough. I mean, that to me makes complete sense, obviously. Because as we've said before in previous conversations, the bank is always assessing the risk you pose to them by them lending you money, right? That's fair enough.
Yeah, absolutely. You might be a director and a shareholder in a startup company that is making losses, and the bank will want to understand that.
Yes. Awesome. Yes. So yes, carry on. I'll shut up.
So I mean, I'm very confident that I will be able to obtain finance for this particular client, but it hasn't been without challenges, and it's also impacted upon the decision of which lender we're going to go to.
Yes, right. Yes. So you might have in your mind a preferred lender for some reason, and actually you can't because of these issues that you didn't realize were actually going to be issues.
Correct. And we all know that every bank
Yes.
has their credit policy niches.
Yes.
And had this client had a particular circumstance that I could only go to one particular lender,
Yeah.
and that lender is not good with credit scores and does the auto decline,
Yeah.
then we could be in a situation where I'm having to go
Yes.
to a third tier lender, paying significantly higher fees,
That's right.
risk fees,
Yes.
lower loan to value ratios,
Yeah.
70% capital loan to value ratios.
Yeah.
So
That's a significant impact on.
absolutely.
Yeah. So that's
Yep.
awesome to know. So what can we all do about this, Tina?
Just think before going and
Yeah.
opening a credit card. Forget about those frequent flyer points for now.
Controversial again. Yes.
Pay cash for items.
Yeah.
Or if you are going to use a credit card, make sure you have the money sitting there to clear it
Pay
in
it off
full.
in full.
Yeah.
Yes.
Live within your means.
Yes. So don't chase those points and balance transfers that they're always trying to get you to entice you into. Yes. Yeah. At least not right before you're trying to purchase
Correct.
property.
And speak to a professional well and truly before you're actually ready to go and start looking at a property on the weekend, so that there is sufficient breathing space and time to go through these sorts of things that may occur. And obtain your own credit file. Go and do a free credit check on Equifax and see what it looks like.
Yes, that's a good idea. So everyone, go off and do that. And what about all those other cards that are lying unused? The store cards, the 16 credit cards that people do still have open?
Look, if they're already open, I wouldn't say close them just yet. I would say speak to your broker or your advisor first.
Yeah.
It is a pain getting all those cards open. So if you've gone to that hassle, I wouldn't suggest closing them without actually finding out if you need to. You might not need to. You might have the borrowing capacity to keep all those cards there.
Yeah. Yes. Wonderful. So as always, everyone, the moral of the story is talk to your finance broker before you do anything so that you get yourself ready. And I think, again, further moral to the story is that you can significantly impact the type of loan, well, whether you can even get a loan, the type of loan, the type of lender that you're going to be with could be compromised. That can then have a flow-on effect to the cash flow because you're going to be paying a higher interest rate. You might have to buy an inferior property because you've got to put more of a deposit in. It can have quite the impact. Yeah,
absolutely.
So
well summarized.
Yes, thank you. I was listening, see. It's awesome as always, Tina. So thank you so much. And we will be with you all again very soon with more wonderful words of wisdom and tips from Tina. So bye, Tina.
Bye, Kate. Thank you.
See you all soon. Bye.
I really hope that you found all of that useful. Tina is a mind of information. She and I will bring you lots more videos explaining all things property finance. Don't forget to leave us a comment and a question. And don't forget to hit the subscribe button and also just give us a little like on the video if you are enjoying the free content. And we will see you really soon. Bye.